All right, welcome back to another episode of the Black Bullion Show. Today we are talking about the Berkshire Hathaway annual shareholders meeting that Warren Buffett conducted over the previous weekend because we're going to be talking about his sentiment of the market today. Now, his recent moves with selling pretty much during one of the best weeks of the stock market in April, selling billions of stock, billions of worth of stocks, signaled to investors that hey, it seems like Warren Buffett is not feeling very confident in this market. Yet he's also gone on record in saying you have to bet on America. So this leaves investors confused as to what to do and what his sentiment of the economy is. In this video, I'm going to shoot him some bail because I think there's a little bit of confusion of what he's trying to say because I don't think he's said it concisely and clearly enough. So I'm going to say it here. Speaking of which, before we begin, if you would like to just not watch the video and you would like to just, get a quick synopsis of this video, check out the description below this video so you don't have to sit through it. But for those of you who want to watch it and see some of the stuff that I bring up and some of the extra details, continue to follow along. And please also like the video and subscribe if you are new. So let's get into it. So here is the thing with Warren Buffett. He obviously has his Berkshire Hathaway company, but he's also somewhat of a pundit himself about the economy. There are a lot of people who invite him on to news channels like CNBC, and they ask him questions about the economy. Now, when he answers these questions about the economy, he answers it almost with the view in mind of the average American. He doesn't necessarily answer it in the view or the perspective of an investor like you and I. He's answering it from the perspective of a passive investor as opposed to an active investor. Now, his movements, obviously, based on what his company is, are very active in its investments. So when he's making certain actions or when he's conducting certain actions, it's from an active standpoint. He's not going to be doing the things that he's talking about. Now, there are people on Twitter. One of my favorites here is Chamath Palihapitiya. He actually reminded me just by seeing his tweet here, or his tweets, about the Berkshire Hathaway shareholders meeting. So he himself is the CEO of a venture capital company called Social Capital. And he's a funny guy, man. So just take a look at what he says here in this thread. He's like, here it comes. He's talking about the Berkshire Hathaway shareholder meeting going live on YouTube. Then he says, if he doesn't call depression, I rage quit. So obviously Chamath is feeling very bearish about the economy himself. Then he starts to refer to other things that are happening in the conference. Second reference to pot, though. And then he says here, okay, he's kind of saying it, significant impact to earnings through end of year. Buffett dumps all airline stocks. That says something to me. If he thought it could rebound, he wouldn't have sold and possibly looked to own more via converts or debt. Instead, he seems to think it's impaired long term. Now we're getting there. There, he said it. So obviously that means Warren Buffett said depression. And here's the thing. There is something called the Buffett indicator, which we'll get into after this tweet from Peter Schiff, who also said over the weekend, everyone now seems to admit that the entire stock market rally off the lows was due to the Fed. But what few understand is the trade-off. We propped up the stock market at the expense of the economy. There is no free lunch. Thanks to the Fed, Wall Street is eating Main Streets. And this is something that we've probably, pretty much known about. I've mentioned this before, that there is a huge difference between Main Street and Wall Street. And stocks been propped up while people are losing their jobs left and right. We're basically at 1/5, 20% unemployment in this country right now. People are struggling out there while, while Wall Street is rallying. And obviously, it's due to what the Fed has been doing with all this, massive stimulus and money printing and pumping. Now, I've been calling for a while that there is a dead cat bounce happening currently right now. Now, you may be asking, what is a dead cat bounce? That's when there's initial steep decline, and then there's a bit of a bump in the Dow, an upward trajectory, smaller upward trajectory than the actual recent highs, and then you're going to get another decline. Now, that is what we are going to be experiencing coming up soon. Why do I say that? I say that because of this. Not that, because of this. Warren Buffett's favorite stock market indicator hits record high, signaling a crash could be coming. Now, again, this is the Buffett indicator. Now, the Buffett indicator divides the total value of publicly traded stocks by quarterly GDP. So let's take a look at the Buffett indicator and where it is right now. So here's the Buffett indicator, and as you can see, it is up there. It is astronomical in 2020. So that tells us that we should be due for a bit of a drop. Take a look at where it was around the 2008 crisis. It went up and then it went down. Here's the dot-com bubble. Went up and went down. So we should be expecting some downward trajectory coming. And also, I made a video previously about the S&P short-term oscillator that Jim Cramer uses to take a look at how the Dow will be performing, or the S&P will be performing. And even he feels bearish, and he's worried because his indicator, this is his favorite indicator, is telling him that the S&P is too hot, is overbought right now. Expect people to start selling. And what do we see towards the end of Friday? The last week of April. We saw at the end of the day on Friday, just downward trajectory. So I'm curious to see what we'll be seeing on Monday, when I actually will release this video. So actually write in the comment section if you will be watching on Monday to see if we have some downward trajectory. I'm curious. So the Buffett indicator is showing that things are overbought. This S&P short-term oscillator is showing that in the near term, we're overbought. And obviously, we have people like CEOs of venture capital companies and people who are on our side as well, Peter Schiff, who are saying things like, well, things aren't looking good right now in the economy. So all signs are pointing towards bearish activity, which means we should continue to see the dead cat bounce continue and start hitting more of that steepness in the downward trajectory. But one of the things that I also wanted to bring up was that in this, in the Berkshire Hathaway shareholders meeting, this was actually a screenshot that someone took, and it shows, Warren Buffett's cash holdings and treasury as well. And this man is holding almost 125 billion in cash and treasury bills. Now, obviously, he is feeling a little bit, as he's been selling stocks and airline stocks, for example, he's been feeling bearish about the economy. And even in the shareholder meeting, he said expect earnings to not do well throughout this year. But even during the conference, he said, always bet on America for the average investor. He said most investors aren't probably in the position to bet on individual stocks. So he's always been an advocate of just buying the S&P and letting it ride for decades, 20, 30 years. So that is one thing that I think people need to realize about Warren Buffett is that when he's speaking about the S&P, for example, holding it for decades, he's speaking to the passive investor as opposed to the active investor. And his movements and actions, again, are because of the active or are active in itself. But let me know what you guys think. Do you guys think that Warren Buffett is, just kind of like uh, not really being 100% honest? Do you think that he is, speaking for the passive investor? Or do you think that he's, saying this so he can keep the, markets propped up? What do you guys think? Let me know in the comment section below. Also, let me know if you think we're in a dead cat bounce right now and we're about to hit some more downward trajectory. All right, guys. Thanks again for checking out this video. Please like, please subscribe. It's Black Bullion.